Bookkeeping looks simple from a distance. Track revenue, log expenses, and keep receipts in order. Yet most small businesses discover the opposite. The work stretches across long weeks, pulls owners into late-night spreadsheet sessions, and exposes knowledge gaps that few intend to manage alone. Many owners spend hours each week on accounting tasks. That pressure creates a need for something steadier and less error-prone than paper files or spreadsheet tabs. Digital bookkeeping tools, QuickBooks being the most prominent example, stepped into that gap by turning a messy, manual process into a structured, automated workflow. They don't eliminate financial responsibilities, but make them manageable. Why manual bookkeeping breaks down so quickly? There's a moment in almost every small business when the simple system shows its cracks. Spreadsheets, while familiar, are fragile. Research shows nearly 90% of complex spreadsheets contain errors, from small formula mistakes to overwritten cells or version mix-ups. Many businesses only notice mistakes during tax season, audits, or loan applications. Paper records create different risks: slow access, inconsistent tracking, and no real-time visibility. Adoption trends fluctuate. QuickBooks surveys reported 85% of small businesses used accounting apps in April 2023. But by mid-2024, only 68% continued as some owners returned to manual systems. Andria Sergio notes, "Most owners don't rely on spreadsheets because they love them. They rely on them because they're familiar. Familiarity hides how much time these systems take." Digital tools relieve that tension between convenience and strain. Automation that cuts hours of repetitive work. Automation is one of the clearest ways digital tools save time. Tasks that once required repetitive attention now run quietly in the background. Bank transactions import automatically. Expenses categorized based on rules. Invoices sent and followed up on a schedule. Recurring journal entries posted automatically. Automation reduces errors and saves time. Gartner shows up to 90% fewer data entry mistakes and over 50% faster processing. Deloitte reports AI-driven reconciliation can cut close time by 40%. As Sergio explains, automation doesn't replace financial judgment. It removes the grunt work so people can focus on what the numbers mean. Cleaner, more accurate books without extra effort. Manual systems often produce mistakes. Digital tools enforce standardized workflows, bank feed validations, duplicate detection, and consistent categorization. These checks act like a safety net, catching errors before they spread. Accountants find tech-forward clients easier to support, with 92% agreeing they are better equipped to handle financial pressures due to consistent, accessible records. Real-time financial visibility for better decisions. Manual bookkeeping delays insight. Numbers reflect past activity rather than current status. Digital dashboards update continuously as payments clear and accounts sync. Owners gain real-time visibility into cash flow, outstanding invoices, spending patterns, and revenue trends. Decisions improve when based on current information, not outdated snapshots. QuickBooks Small Business Index shows how up-to-date data helps small businesses plan, hire, and manage revenue more effectively. Integrated tools that prevent double work. Bookkeeping complexity often comes from scattered systems, point-of-sale tools, payroll services, and payment processors all separate. Digital platforms connect these into one ecosystem. QuickBooks integrates with bank accounts, payroll tools, e-commerce platforms, CRMs, inventory systems, and payment processors. Updates flow automatically, reducing duplicated effort and errors. Better collaboration between owners and accountants. Cloud access allows the business and accountant to view the same data simultaneously from different locations. Continuous visibility supports earlier guidance, cleaner adjustments, and fewer surprises. Remote work, seasonal help, and multi-location operations benefit because everyone draws from the same updated information. Reduced administrative load and operating cost. Bookkeeping software has a cost but pays for itself through time savings, fewer errors, and faster reporting. AI-supported platforms lower administrative overhead while streamlining operations. When time equals money, even modest efficiency gains matter. Digital tools reshape the cost and workload of financial operations. Digital bookkeeping tools became essential because traditional methods created more work than most businesses could sustain. Automation reduces repetitive tasks. Built-in controls maintain accuracy. Integrations eliminate double entry. Real-time dashboards offer a clearer financial picture than spreadsheets ever could. Together, these features transform bookkeeping from a weekly struggle into a steady, manageable part of running a business.